Easy. All right, I think we are live, Mark. Let's just check the stream.
Seems we are.
Hello, everybody. Thanks for joining in. I'll just distribute this stream. Tell everybody in the Discord.
But you cannot and should not miss this.
Chat with the absolute Chads from Paradex. All right. Glorious morning, Dove. How you doing, my friend? A bit of a change to this week's stream, everybody. We have, instead of the lovely Pepito, the equally lovely Kimar or Mark joining us.
I don't know if we can say pretty lovely, but I'll try. I didn't bring my big guns like Pierre would with me. But I mean, luckily in my first appearance, we're gonna talk Paradox, which I mean has been one of the protocol I've used the most recently. Not profitably, but at least I had fun with it. And I'd met Philly a bunch of time last year, a Chad, and I'm sure we're gonna have a blast in this hour.
Should be great. We've got a fair bit of motion going on in the background there because we are at the Pith week where we've got all of the team together cooking exciting things in the office, which has been great fun. I could see Fiddy there in the audience waiting for us to bring him up. I'll bring him up to the stage right now. You have to excuse me. This is my first time being your illustrious host, so it's a bit dodgy. Fiddy, how are you doing, my friend? Welcome.
Good, mate. Good to see you guys. Where is this Pith week? Is it in Porto or at the office? Or nice.
Yeah,
nice.
We're all in Porto. Hang out. Where are you joining us from, Fiddy?
We're Paradox Week, which is every week in Singapore. So
Nice.
Everybody's grinding back there. That's Keith. It's Rob. I'm not sure if you've met these guys before, but I think you've met these guys in the chat. So.
Nice. If you guys can let us know in the chat if you can hear Fiddy okay. He's a bit quiet on our end of things, but that might just be because of our streaming setup. So if you guys can hear him okay, let us know. That would be fantastic. Fiddy, how are you doing, man? Thank you very much for joining us. It's a pleasure to have you. Just to kick things off, can you give us a little bit of an introduction to yourself and how you joined Paradex and your journey up until this point? I would love to learn more.
Sure, man. So yeah, I'm Fiddy Bips on Twitter. My name is Anand. I am co-founder, CEO of Paradigm and Paradex. Got my start in crypto back in 2019 when we decided to. So my background before this was, on a trading desk. I did a bunch of different roles. Quant trader, sales trader, just a bunch of different things, research, basically every role that you could. And when I was on the trading desk for commodities, I realized that there was this really big gap for trading large. Anytime I traded a large size ticket in commodities, I used to trade crude, natural gas, things like that, refined products. I had to deal with a broker on chat. And I hated that. That was just like the absolute worst thing because brokers are always trying to game you. They never give you the full information. They're shady. They're humans, right? So having a human in between was super annoying. It was just not efficient. And so the original idea of Paradigm was basically this idea that can I create an automated system for trades that are very large and complex. If you want small trades, you can go to the screen. The central limit order book can get you what you want, but if you want to trade something in large size, you can't do that without revealing information in a way in which is kind of adverse to you, because people can fade you, front run you, and brokers are never really working for either side. They're really working only for themselves to maximize their commission. And so Paradigm, the original idea was that to be built this RFQ initially for commodities, and then kind of pivoted to crypto. Because crypto was taking off, and I was trading crypto in my PA, and it's sort of like this realization hit me one day that hey, a new asset class is being born, and when's the last time something like that happened? It was probably gold, and that was over 50 years ago. So to me, that was a pretty kind of like powerful realization that like, hey, this might never happen again in my lifetime. And the infrastructure required to trade this asset was just not existent, especially in an institutional sense, because when an institutional trades, they worry about leakage, they worry about all these different things, because people don't want to give away alpha. And so paradigms, so I realized that, and given that I came from that background, it was very obvious to me that there was no infrastructure in this space, and if this asset class actually ends up becoming legitimate, which 10 years later it now is, and you're now seeing people jump into crypto or jump onto the crypto train. I realized that being first in that space to build that infrastructure would kind of have like dividends for a long time. And so that's I decided to pivot from commodities to crypto, initially for spot, but then realized very quickly that spot would also become commoditized. And so decided to start with options because the exchanges were starting up at that time, OKX, etc. And I was like, there's no way we could compete with these guys because they're already kind of many years ahead. But options was still fairly small back then. Options was only 5 million a day, maybe 10 million a day. So it was as much a bet on Paradigm as it was a bet that options itself would take off. And the logic there was, hey, if spot takes off, derivatives are, and perpetuals were just beginning to take off. So I said, options are will happen kind of soon after.
Options are still relatively small compared to perps and futures on chain at the moment too, right? Why do you think that is?
Very small, and I've written extensively about this. But there's a bunch of different reasons. But what it really comes down to, in my mind, and of course, we run, so basically Paradigm, our main business today, does about $1 billion a day in volume, but we're about 30% of Deribit on any given day. And what I've realized is that, one is this perpetuals, number one, are a super product, right? Perpetual futures. If you think about what they do, is they give you super high leverage on a product or on an asset that is super high volatility, right? And the payoff of a perpetual actually looks like an option because your initial margin acts like your initial premium because you can only lose how much your initial margin, right? Below that you just get liquidated and you're done. There's no infinite downside, right? In a true future sense. So it looks like an option, right? Because if it goes up and you're long, great profits. If you go down, you only lose your initial margin. So it looks like an option because that's what an option does, asymmetric payoff. You combine that with high leverage and high volatility, and it starts to simulate gamma. And gamma in options is basically this like accelerated profits, right? Because when you basically options, you have this feel that you have like $1 down, but when price goes up by 1%, options go up by 5%, 10%, 20%. That's because of this kind of acceleration that's inherent to the instrument. That can be simulated because of this unique combination of looks like an option, high leverage plus high volatility. You combine that together, perps start to feel like an option. So basically, perps sucked up the demand for options itself. The other problem, which is also kind of underappreciated, is that because of the high IV of Bitcoin and crypto in general, options are expensive because options are insurance. And so if something is super volatile, then if somebody's giving you insurance on this volatile thing, they have to protect themselves, and so that insurance itself is volatile. So the combination of these two things, I think, has kind of like worked against options. As Bitcoin vol keeps going down, you will start to see Bitcoin options take off more because they're just cheaper, and you start to value this kind of asymmetry of options more than just the high leverage. So it's a long answer, but I think it's the right one.
That's really good. That's actually the first time I've heard somebody explain it like that. So that's actually really helpful to a smooth brain non-trader such as myself. That's fantastic. Paradox is bringing out a new chain, right? You guys have gone under there's been a lot of development and a lot of I won't say pivots, but changes to your sort of strategy over the last 12-ish months with what you guys want to deliver and how you want to go to market. Is that can you tell us a little bit more about that?
Yeah, so I wouldn't say that the vision has changed because the vision has always been kind of laser focused and the same, really. It's just that, it just obviously we can't say that we're doing everything out the gate. You never want to be everything to everyone out the gate. You kind of want to, focus on one thing, deliver value, and iterate on to the next thing, right? And that's been our philosophy internally for basically about everything we do. But if you kind of like boil, if you want to kind of distill down like what we were building, we wanted to build an exchange that where users or traders can trade without compromise, right? Because if you trade in crypto today, especially in DeFi and especially in derivatives in DeFi, you have all of these different problems, right? Fine, I can trade this asset. Maybe it's liquid on Hyperliquid or any DYDX, but I don't get multi-collateral. I can't, compose or do a spot trade with it in a unified margin sense. I don't have options kind of with me. I can't auto borrow or lend like in the old FTX days, if you could remember, right? You could use anything as collateral, borrow anything against it, auto borrow and lend at the same time. You have all of these different sort of like things that trader wants to do, but in DeFi, you can only do them maybe 2 out of 5 or 1 out of 5, right? Maybe you can do 1 out of 5 really well. Hyperliquid is a great example of that.
Yeah.
Perps liquidity is fantastic, and that scale, so fantastic. But guess what? You can't do perps and options in the same contract. They have separate pools for that. Then you got to move capital. It's capital inefficient, etc. So when we set out, to build an exchange, we said, hey, you know what? We want to build an experience where traders never have to compromise. If I have 5 things I want to do, I should be able to do all those 5 things. Very quickly, we realized that if we want to do this on chain, the only way to do this is for us to have control over the chain stack, or basically the chain logic. And so we realized that there's no way for us to do this as an app. We have to do this as a purpose-built chain. And so as we were looking for which chain to build or build on, Starknet was the best kind of fit our needs. We're believers in ZK. We think it's the way to scale Ethereum. I think it's the only way to scale applications, and we can talk about that separately. But we realized that this is the stack for us, and that's where the super chain comes from. So this idea of super DEX and super chain comes from this idea that, like, hey, you can trade without compromise, and you can also build without compromise, because the stack itself unlocks our ability to do things and customize execution in a way that basically optimizes the execution experience for the end user, so they never have to compromise.
Mm-hmm.
So is the vision for this super chain very much, let's say, I mean, I don't want to say permission chain or permission to deploy, as in you want to host all Paradex related product there, and just have this running on a chain, so you have this accountability, transparency? Or is it almost a bit more, let's say, like IPVM, where you want other people to come up and build on top of Paradex, or whatever that could be unrelated to Paradex?
Yeah, so that's a fantastic question, one that we think about all the time. The end, but I'll start with the end goal. Like, what is our end goal? Our end goal is to scale on-chain finance, right? I think that's Hyperliquid's goal. Everybody that's in this race is trying to bring as much finance on chain and be the first to scale it, right? That's where the kind of the stack comes in. What are we trying, to be able to do this? You need a stack on which you can actually do this at scale, right? So we talked about that first. But to scale on-chain finance, you need, in my opinion, you need 3 things. You need liquidity, you need privacy, and you need performance. Performance piece you get from the chain, which I've talked about. We believe this is the stack that scales. The liquidity piece comes from the DEX, right? Because if you think about it, like, think of the NYSE or the stock exchange or the capital markets in New York. There's an economy built around the capital markets, and if you can think of the capital markets as this mega exchange where there's lenders, there's borrowers, there's repo markets, there's all of these different things. But all of that is kind of happening and it's interacting with each other. But that's where the liquidity piece comes from. And around that is what powers businesses. Businesses can access capital, borrow, lend, issue stock, bonds, whatever, right? And so this second piece of liquidity is what the super DEX does. But the point I'm trying to make is that if you're trying to scale on-chain finance, you need to think of liquidity, privacy, and performance as foundational primitives, right? And each piece that they can work with each other to scale, basically the whole thing. And so Paradex is building the liquidity layer so that when businesses come to build on us, which will build on the superchain, they have access to this liquidity the same way businesses in America have access to the capital, or businesses globally have access to the capital markets in the world. So the long story, basically to summarize it, Paradex is the capital markets, or at least the internet capital markets, or our version of it. And Paradex Chain will be the businesses that basically have access to this liquidity and are able to build and scale, if that makes sense.
It does make sense, yeah. One of the main selling points, as I understand it, from ZK Tech is that it is a very privacy-focused chain. They put quite a bit of a premium on the privacy features that they're able to deliver to the people using it. Do you have much of a thought or feelings about how Hyperliquid are doing this? Like, what comes to mind is James Wynn is the most topical example of doing a very public, very loud $1 billion long over the last 2 weeks, and being very publicly hunted for it. Do you have concerns about that on Paradex, or is that something that you're thinking about in terms of how to deliver privacy to your users? Obviously, James went about it in a different way and was very he didn't do it quietly, right? He made a big song and dance about it, and that's on him. But I'm curious to know how you guys think about privacy and what your approach to it is.
Yeah, so look, my opinion is, I've been very loud on Twitter about this. I, don't think you can scale finance without privacy, right? It's just fundamentally not possible. And the reason is that basically privacy has a cost. Think about it this way. Do you actually think that BlackRock, or any of these large pension funds, or any of these large hedge funds will actually come and put their entire position on chain and tell the world what they own and what they're trading and how long they're trading it for, right? They won't. It just simply won't. There's a reason why there's a premium anonymity in the capital markets. That's why order books are anonymous. There's basically pre-trade privacy and post-trade transparency to ensure that there's fairness that happened. But there's transparency for fairness, not because people can see. Because as soon as people can see what you own and how long you own it, that invites predatory behavior, because you can trade you, front run you, and that's what happened to James Wynn. He started to complain about it, right? So fundamentally, privacy is also a foundational primitive to scale on-chain finance. Without it, you cannot scale on-chain finance. I don't care what anybody says. I think this model is not scalable, and that's why. And by the way, this is even before this James Wynn situation. We've been probably the first to communicate over a year ago that privacy is going to be very core to what we are building. Without it, we don't think you can scale finance, right? This whole James Wynn situation was really sweet because it allowed us to tell the world, and now the world is paying attention to privacy. CZ's tweeting about privacy dexes and whatnot. Guess what? We've been here and we've been doing this for the last 18 months with privacy as a goal in mind. Now, to your question about how we do bring it, right? So ZK rollups themselves, or validity rollups themselves, don't give you privacy out the box. It's kind of a misnomer in the name. So for example, if you're building on an L2 today, that is a ZK rollup, you can actually see the positions on chain, right? To mask that, you have to basically create either encrypted accounts, but that just makes the computation or execution on chain just very difficult and expensive. But again, the reason we chose our stack is because the folks at Starkware, this was very much part of their core thesis that this is going to be a thing, and this is because we're Stark powered. Other stacks are not Stark powered, and they cannot do this at scale at this cheaply, right? So that is exactly what we're building. So we have a two-part solution. Part one will be masking your position on the L2, which will happen on a month from now. So you can trade on Paradex, and no one will know your position or trades, just like a centralized exchange. But in 6 months, we will actually start to prove that execution on chain. So there will be cryptographic guarantees, of all of this sort of execution happening in an encrypted way, and this will be on chain. That will take a little bit more time, but that basically completes our full scale privacy roadmap.
Do you find that's something that your users demand from you as a product? Is that something that people who are trading obviously the larger the size you have, the more of a premium you have on privacy as well. Is that something that you frequently encounter, that people are requesting or putting a premium on?
So let's put it this way. If people didn't put a premium on that, I would not have Paradigm as a business. Paradigm, the Paradigm's whole business model is that if you're trading size, people don't want to go to the deribit order book because they don't want to put their size on the order book to display to everyone. That's why they go RFQ. Execution happens in a private way away from the order book. We're 30% of deribit, from that. So like we have 3,000 customers, most of them institutional. Nobody wants to put large size, orders in the order book. So there is the demand for this. Yes, I mean I would not have my main business if this were not true.
Are people willing to sacrifice a bit of UX for this privacy? Like, and how do you envision it? Do you want to? Because I mean, I simply love using Paradox. Like, it's just one click. You have no pop-up, super easy. Are you willing to kind of make the UX slightly worse to bring this privacy, or you won't ship this privacy feature if it impedes on the experience?
So there will be no compromise on the user experience when we roll out privacy. To the user, it will make no difference. They will continue to doing what they're doing. There will be absolutely no impact. It will all happen on the chain stack. Now, instead of seeing your position on chain, you see an encrypted position on chain, and that's it. That's the beauty of the solution. It's super elegant, and it does not impede the user execution or workflow in any way.
I love that.
And I guess another big pillar of these internet capital markets, on top of privacy, liquidity, and I think you also have this plan with XUSD, is the stablecoin part. You want,
Exactly.
in the end, like US dollar pegged, let's say, stablecoin. And like it feels everyone nowadays, whether you're a protocol, a chain, you want to create and own this stablecoin stack. Like, is XUSD going to be in the same vein? Like, what do you want to achieve with this?
So, I think of XUSD the same way I think about kind of the risk-free rate in traditional finance. Now, what I mean by that is the following: that, if there is a native yield, so for example, you park your money in a trading account somewhere in an exchange in TradFi, you get the risk-free rate because they take your capital and they go invest it in whatever the treasuries are, right? So your money is sitting in yield-bearing assets. To me, the basis in crypto is the risk-free rate, right? It's a delta neutral source of capital. So you're not exposed to market risk. Yes, you have smart contract risk, etc., but you have kind of a delta neutral access to this risk-free rate. So if there is a native risk-free rate in crypto, anybody that comes to Paradex should be able to earn that rate by doing nothing, by simply depositing money in your account. And you can elect this, it's not forced on you. You can say, hey, convert my USDC to XUSD. We take that, go buy spot and short futures, and now you collect the basis from that. One of the advantages, okay, so Athena has done this. I think most people know this strategy from Athena. The one differentiator for us is that because we have portfolio margin, when you do long spot, short perp, our ability to give you more, basically we can't give you more yield, but we can demand less collateral because that you have portfolio margin between the spot and the perpetual asset. So effectively, you with the same amount of dollars, you can juice more yield. And this is a game changer because if Athena is giving you 5%, we can give you 10% by levering it up 2 times, right? And again, now this is risk-free, right? Of course, we can lever up 10 times, and it's not risk-free anymore because now you have leverage risk. But for example, you can easily safely lever it up 2 times or 3 times, give you 15% risk-free rate, and now every single user on Paradex just gets that for free for doing nothing.
How do you feel about the competition out there with stablecoins and that type of thing? You have a pretty diverse product range, all of which are being built out in one way or another across different kinds of stacks, and it's a very competitive market out there. What do you guys think is setting you guys apart from all of the rest? And I'm speaking mostly about Hyperliquid here, right? They've been the huge success story over the past couple of months. But you've mentioned Athena as well, which is offering a similar stablecoin type of product.
Yeah. So I don't. Let's break that up a little bit, right? So I don't think XUSD will compete with, you know, I don't know, USDC or any USDT in some way, right? It's effectively, I'm just telling my users that, hey, when you come to Paradigm, you have the option of collecting this delta neutral yield by doing nothing, and we just issue you this stablecoin kind of in return. You can use the stablecoin on Paradex to trade. You can use it to deposit into other vaults, or you can withdraw it to L1 or any other blockchain, and then it's basically competing with USDC or anything on any other stablecoin, right?
Like, so it will exist separate to Paradex in that sense too.
Yeah, it can exist because it's a token that has some value locked somewhere. Now this is fully on chain. That's the other benefit, right? Compared to Athena or anything else that have kind of custody risk. Here everything's on chain, and it's all cryptographically kind of verifiable. That like, yes, you have a long position, you have a short position, the money is there, and all solvency is kind of like guaranteed through proofs. But that's the way I see it. I don't want to market it as like, hey, use this instead of USDC. I'm just saying, hey, if you're on Paradex, you get 15% for doing nothing. Like, to me, that's a very powerful thing. Why wouldn't users do that, right? Because you already have capital here. You just turn on the switch and you start earning kind of in a risk-free way. So that's on the stablecoin side. I think you were also, or did you also ask how I think about competing with on the exchange side with Hyperliquid, or was that?
Yeah. I'm just curious to know your thoughts about sort of how Hyperliquid's go-to-market strategy has served them thus far, and I'd actually love to know if Paradex is thinking along similar lines, or if you have a different approach to your go-to-market strategy, and just what your thoughts on it are more broadly, because obviously they're a huge part of our broader Web3 narrative at the moment. They're taking up a hell of a lot of mind share and have captured the imaginations of a lot of people, not only because its price go up, but it's also a fantastically good product that has really seemed to have nailed a really great solid portion of the market.
I mean, no question about that, right? I mean, they absolutely crushed, building the product, but also the go-to-market, the timing. They got everything right. They did more for the space, for the collective DEX space, than any project, like basically than all the DEX projects combined, right? Because for the first time, DEXs could be something more than a DEX. Before that, our ceiling as builders was DYDX, which was, I don't know, the FTV was 1, 2, 3 billion max. I don't remember. I mean, minus the craze in 2021, 2023. Hyperliquid for the first time showed that, like, oh, the TAM of this.
Fidi, I think we've lost your sound there for a second.
Can you hear me now, or really? Nope.
Let me just check. We'll just double check on the stream. We can't hear you though.
Sure.
If you guys are listening on Twitter, let us know if that may be just an us problem.
They did. Can you? I'm speaking, so can you? No.
Yeah, so I think we're rugged on our side.
Yeah, it's just us, so it's working on stream. So if you go ahead, sorry.
Okay, so yeah, so like I said, I think Hyperliquid did more for this space than basically anybody combined, right? So in my mind, I think I love Hyperliquid because I think they've. Do you want to just stop while?
May try again, maybe, Fidi. If I hear you.
Or should I?
All right.
Let's try that again, Fidi.
Can you hear me now? No?
That's weird. Why did that just drop out all of a sudden?
Should I try joining again, maybe? Let me try joining again. See whether that helps.
Go play that again.
Because we are delayed here. Another problem.
Oh, he's gone. We'll see if we can bring him back up again.
Hey, can you hear me?
Oh, yeah.
Hey, there we go. That's better. Okay. Nice. Okay.
Yeah.
Sorry about that.
All good, all good, all good. So I think you were asking me about how we think about competing with Hyperliquid. And so first of all, hats off to the team. I have huge respect for the team. They built a fantastic product. It scales for perps. It scales phenomenally well. They found product market fit. And of course, they've continued to execute on the Hyper EVM, etc. So huge fans of what they've done. It also makes us, worth more to people, right? So to me, that's, I didn't do that myself. Somebody else did that work for me, and that's, my TAM is now, more orders of magnitude bigger than it was 10 months ago. But in terms of like competing with them, first of all, I don't think we compete with them because fundamentally, if you think about it, the broader trend here is this kind of like sex text migration, right? More and more users, as the performance gets better, more and more users are coming to chain, and they're coming to chain mainly because you get to own a piece of the network, right? You don't get anything for trading on Binance. You don't get anything for trading on OKX. Those folks don't want to give away value. Here's you're saying, hey, not only can you get the same products, you get newer products, you get non-cost, basically self-custody, but you get to own the network. And I think this trend is only going to accelerate as the tech gets better. So in that sense, Hyperliquid and us are aligned in fighting the bigger exchanges to bring more people on chain, and I think all dexes are. So that's why I don't try to pick fights with any dexes, minus the trash talking here and there. But like other than that, I think I'm from in my head I don't compete with the dexes. And if anything, we should all be aligned to bringing more users on chain, right? But in this journey, I think our approach and Hyperliquid's approach is actually quite different, right? Hyperliquid's approach, build the exchange, and then now build Hyper EVM, and people can come around it. But I think there's like two fundamental limitations that we think to their model that kind of is we approach it differently. Number one, Hypercore and Hyper EVM are two separate things, right? So you basically break synchronous composability. You can to read and write precompiles. You're able to basically read things and do things after, but those actions will only happen in the next block. You can't basically change state in the same block. So I think this to me is not great long term, especially if you want core things such as a lending protocol, anything where you want to do like flash loans combined with the trade, all of these things together. You break basically synchronous composability, if you do that. So in that sense, Paradex is different because we aren't limited by the issues of the stack that they've chosen, because our stack is fundamentally different. It's on ZK, it operates on states, diffs, etc. It's much more scalable. So for example, give you a good idea. Today we can do like on our VM, we can do 1,000 TPS just base, and with Cairo native, which is basically translating code to basically machine code and executing, we can do up to 5 to 10,000 TPS. It will be implemented, in the next couple of months, right? Hyperliquid EVM, I think, is 7 TPS, 8 TPS. So it's still early. Of course, they will optimize, but fundamentally, we are not limited by that. So our flagship application, which is the exchange, can actually live with other core parts of the protocol, which are lending, etc., in a way in which it is composable. So I think that's number one. And number two is, I think, the privacy piece, which I talked about, which is privacy to us is fundamental. We will have encrypted accounts, and that we think it's the only way to scale. But beyond that, in terms of like fundamental differentiators, our like version of Paradex, or basically our vision of Paradex, is to actually build in some sense a super app, where we're not trying to be the ecosystem right away. Maybe that happens in the future, and that of course we will do that. But we first want to build. We're not trying to compete with Solana on the chain. We're trying to build the best exchange in the world, where you have lending, borrowing, interop. Interop is also a big part of our thesis. We don't think all of finance can be built on a single chain. We think it will be distributed across multiple chains. So interop has to be a part of the value proposition. That's why we have such an emphasis on Hyperlane, which is coming soon. It allows us to issue our own tokens, etc., and have interop. But also it gives us a quick, easy way that we control to access liquidity on other chains. So interop is a big piece of this. But there is a phasing in all of this, which is, number one, today we just want to be the super app where traders can trade without compromise, can flat borrow, lend, do everything in a single transaction, and can do that at scale. And then eventually we will scale the chain, but that's not today. And I think that's the fundamental difference, is that we're trying to be a super app. and B, they're trying to be a chain and kind of trying to compete with Solana.
The hype token is obviously also a big part of Hyperliquid's success, and I would imagine you have some pretty exciting plans for the Dime token in the same regard. I don't know how much you can or cannot talk about that. That's generally a pretty sensitive topic, but I'd love to hear more about the tokenomic side of things, or at least how you're conceptualizing the how the market would receive that, and how you guys are thinking about it.
Yeah, like I said, I can't say much about that. Just, but I think what I have said publicly is that, utility only through governance is not enough. Does not generate enough value accrual, right? Fundamentally, I think hype in this sense changed the meta. They showed that for a token to succeed, value accrual must come through cash flows, right? And this like changing of the meta has happened. I don't think we're going back, at least for protocols such as ourselves. So meme coins maybe slightly different, different framing. But for us, there's no way we can exist in the world and say, or any project like us for that matter, cannot exist without economic value accrual to the token, right? So in that, I think you can understand pretty much everything that needs to be understood. But that's the meta going forward. And any project that basically doesn't do this, I think, is going to be down only going forward.
More high level on this, and even if it's not for Dime, keen to get your personal angle on this. Would you prefer this like cash flow flowing through like this buyback a la hype, or more as, let's say, native yield distributed, maybe as USDC? For example, personally, I mean, the hype buyback of a token, I mean, everyone knows that there is a massive buyer.
Yes.
Like, I don't want to say it's the exit liquidity, but you always have someone that will bring you liquidity. So it's great. Token go up, etc. But personally, I'm way more proponent of distributing yield and like to stakers or to whatnot, because it feels like, do you want to own, like, it's already your own token? Do you want to own 95% of this volatile token? I'm not sure.
Yeah, I mean that's a good question. I think it's less about what I think is the right thing, and I think it's more about, at least for now, it's more about the most optimal way you could do this in a market setting. In the sense, checking the regulatory box. I think buybacks check the regulatory box a little bit better than distributing it as yield. So I think that's naturally one reason for you to do that. The other reason I think people like it better than a yield or a staking kind of product like DYDX is because it reduces the supply quite directly, right? And and it does so. There's this kind of like very direct value accrual link that comes from that, right? Value is accruing, but also supply is going down. And yes, it does. From a regulatory perspective, it hasn't traditionally looked as bad as staking would, for example, or staking yield would. So I think that's the reason why the market is doing it now. Will that change in the future? Probably, as the regulations get friendlier. I do think tokenomics designs and just like value accrual will also change. A good example, I think, is also, I guess this is an open question, is do you think, giving 100% of your token away to buy back tokens at this early stage of a project is good for your long-term growth? Because if you think about like a high growth company in a traditional sense, they're reinvesting cash flows for growth rather than giving it, spending it on share buybacks, right? But I think these are open questions. The market is going to probably move to an equilibrium where it will find like what the equilibrium is for that meta or that time. And I do think projects will start to keep a little bit less cash flow for future growth, right? Because ultimately, if it's anyways going to the token holders, then why not also invest in future growth, which I think is if you want to keep growing, you have to invest in future growth.
Yeah, I think one of the things Hype did well is really lean into that community and bring along those people that were putting volumes through Hyperliquid and really backing the product and giving them some real stake in the game, and giving them an allocation that was not only meaningful to the people in a monetary sense, but meaningful in a volume sense, in that they own a significant portion of the total supply, and the community, if they had a unified voice, would actually have a genuine say over how and what Hyperliquid is able to do. Is that something that Paradex is thinking about moving forward?
Yeah, I mean, that's part of any playbook these days, right? I mean, it's pretty. I mean, we've said this. I think the foundation has said. I can't speak for the foundation, but I believe in the foundation post, we've talked about utility through governance, etc., and giving people a real voice. So yeah, I mean, I don't think you can build a community without that. Going forward, that's my honest opinion.
No, I totally agree. Do you guys have anything in mind for community moving forward in that regard? I know you've got an NFT drop coming up and potentially some other stuff.
Yeah, this is something we've been working on for a long time. It's much more than that, and I think I'm super excited. So when the opportunity came to talk about this, I was like, this is kind of the perfect place to drop this. So it's been over 6 months, but we've if you think about what's happened in the last, let's say, 6 to 12 months, the brand creation cycle has actually been kind of flipped on its head, right? And it's the most visible, I think, in crypto, relative to fintech or just in tech in general. Companies used to build product that were valuable, and then through their adoption, gained attention, right? That was the meta. And so people kind of like, oh, I got to build the best product that's going to sell. That's like very like conventional Silicon Valley advice. If you think about what's happening in crypto today, you don't need any of that. You can get attention if you're good at selling your brand or selling your dream before the product is even created, right? And then, of course, you get mindshare, and mindshare leads to distribution. So effectively, you get customers before you even have a product, which is an insane thing to think about, but also a super, super powerful one. And then with things like Kaido, when Kaido and Cookie now are basically like tools to quantify this attention. So if you can quantify, track, and reward attention before you even have a product, that's insane. Like it's basically like a superpower, right? Relative to people that don't have this tool. So brand building today, A is basically gotten flipped, right? You generate attention first, and B, and then you launch a product, right? And when you launch that product, you already have a set of loyal users because they bought into the dream when you were selling it, to begin with. And so, we like to think of it as like, okay, if this has happened, and basically building a brand today is now at the intersection of like culture first, in a weird way, community, which is really part of the culture, because the community really is the culture, and that's obviously the team is part of that. But really, community and culture are really two sides of the same coin. And then there's like the economic layer or the product, right? So you have kind of culture and community and mindshare, and then you have kind of like core economic product layer, right? This comes second, this comes first. And so people who are good at generating hype and mindshare through community and selling the dream are able to get distribution for the product when it comes, right? So business basically has two layers. So as we were thinking about, hey, how do we basically go to market on this? Because if you think about it, our paradigm as a business it's an institution business. It's nothing like this. But when we were deciding to go to market here, we knew that like, okay, we have to do something different because things are fundamentally different here. And that's when this kind of realized, as we were thinking through this problem, we had this realization that, well, building a brand today is really about two things. It has two layers. It has like a core economic layer, which is the product, which we already have as Paradex and Paradigm. And B, there's this kind of culture/attention layer where value accrues through kind of mindshare and community, right? We already have the product, we don't have the mindshare, right? And so that's what we're basically doing, or that's what's coming, is we're basically going to launch the Money Badgers as a brand that basically tokenizes our culture and community, right? Dave, which I think you've heard me talk about, or the community has heard me talk about, that's our mascot. He is the face of the Money Badgers. He's the money maximalist, as we like to call, we talk about him internally. It will be first, there'll be an NFT, then a meme coin. And so, the closest analogy to...
It sounds a bit like you want the Money Badgers to be to Paradex what Pudgy Penguins have been to Abstract, in a sense.
You took the words out of my mouth. That's exactly right. Money Badgers is to Paradex what Pudgy Penguins is to Abstract. I think that's the closest project, and I think Luca is, he's a visionary in terms of like talking about tokenizing your culture, etc. So there's a lot of kind of inspiration, from that. But that's the realization we had, that like, hey, if we want this to really scale, we have to not just go to market in a traditional sense, we have to build a brand. And to build a brand, you need to really build this attention layer. And this attention layer, that's the other insight we had, needs to live separately, because it allows you to unlock the mimetic premium that exists in culture. If you build it as just part of the dime token, it's not going to have the same spirit as if it lives as a meme coin. You can be unserious with it, you can do very creative things with it, right? But the idea is that it lives separately and it has its own kind of life and spirit that you can take on its own, right? So that's the idea. So that's what we're announcing today, is the launch of the Money Badgers. There will be an NFT, there will be a meme coin. The other really, really cool thing about this is that if you think about the value pie that accrues, so let's say the commercial layer or the economic layer, which is the product, let's say the product generates value, right? You now have this pie of value, right? And of course, like as Mark asked earlier, I think you asked, you say, how do we direct, where does this value flow? Does it flow to buybacks, staking yield, whatever? Project can decide a bunch of different ways. But now, if you explicitly define the attention layer as basically this tokenized layer of attention or token, you can also direct value towards attention. So now you can monetize this brand asset that you have and reward people for mindshare, for attention through this layer. So just it brings up a whole new universe of things. So you can think of it as like a meme coin with value pool, right? Which is, again, it's a completely new thing. And I think if we do this right, not just if, I think when we do this right, this will be adopted as the playbook by basically every crypto company out there. They will realize that, hey, I need to generate attention first. And you kind of are already seeing this informally. Infinex with their patron NFTs, a bunch of different people are doing it. But I think this will formally become a thing where people issue NFTs to identify their most loyal users, issue a meme coin, and maybe they can direct some sort of value accrual to that because they want to reward their users before the actual economic token, which is dime, will actually come in the future. And I think this playbook now will be sort of formalized once people see how it kind of works.
I love it. Is a meme coin with value accrual actually a meme coin though, Fiddy? Or is that something else? Are we sort of playing with a bit of a new paradigm here in terms of how things are developing?
I think so too, and maybe it will be called something else, right? Who knows? Crypto, one of the amazing things about this space is just you can experiment kind of like infinitely, right? And people are always trying to do the two things. And that's what I love about this project. Is just like it's just given us a whole new dimensionality to the problem, and it's opened up this design space that really it's like your imagination is the limit, right? If we just did this within the context of let's create a Kaido campaign or whatever, that's just bullshit. It's just like something you do. But now we're launching a brand, it can have its own voice, it can have its own platform, and people can interact with it if they want. Like, for example, think about it. When we create content on TikTok now, it can be under the Money Badges, and it has nothing to do with Paradox. It's just cool content we're putting out. We can use it for education, we can use it for whatever we want, but there must be this loose affiliation with Paradox so that people know that ultimately this brand is tied to these guys. And I think that's what most people will start to adopt, as more and more projects kind of adopt this.
I love it. I love that approach. That's fantastic. When can we expect to hear more about Money Badges and sort of a mint date, or how the mint's actually going to work? What's that process look like?
Yeah, so that's maybe a month from now, you will probably see the Money Badges if all goes well, the NFT collection first. Even the rollout of it, I promise you, is going to be insane. We've put in so much thought. I put in more thought into the rollout of the Money Badges than I've done in any feature on Paradox, right? And we put a lot of thought behind everything. So that should tell you everything about how this thing is going to roll out. It's going to be gamified. It's going to be super exciting. It's going to be the largest mindshare moment in crypto. I promise you that.
Exciting. I love it. I love it. Mark?
No, I mean, I think it's one thing that, I mean, Hyperliquid had this. Their NFT for the big traders. And it's, I mean, regardless of the, let's say, past NFT meta, it's one thing I'm still shocked we don't see so much is like leveraging these type of NFTs to give extra features or extra like course, you could stake a gazillion amount of token, you get reduced fees, a bit like the centralized exchange way, or maybe Hype does it.
Infinex have done it really well, I think. So all of the patron NFT holders get early, like 1 or 2 weeks early access to their features. They get to beta test it. They get zero trading fees, zero swap fees on the Infinex platform. I think that model, or a variation of that model, is going to be very successful. I really like how they've done that.
And we've seen a bit the same with Pith, like the community created Pythonians, and because and arguably Paradex is an end user facing protocol product, Pith an Oracle, so it's very dev backend stuff, and it's through these NFTs we managed to get like thousands of people like involved in the Pith network and caring about Oracle. Like no one in the traditional world would care about freaking like mobile antenna or how Wi-Fi works. And so like gamifying this, and yeah, I think it's the best way to talk.
No, I think this what you just said is, again, talking about a playbook. I think another playbook that we followed always is that we think of bootstrapping as concentric circles, right? Where your innermost concentric circle is like your core set of users. So the first thing you want to do is you want to first identify who these users are, and by default, the people that have helped you scale in the first 10 months of the project, and your most loyal, diehard followers are basically people, citizens of this first concentric circle. If you know who they are, the very easy thing to do is to first identify them and basically like award them with this identity token, which is the NFT. So forever they have this badge that like, oh, I was part of the early days, and like even if that thing doesn't have like economic benefits in the future, just the spiritual benefits of like, oh, I'm part of this fucking community. I was there grinding it out in the fucking trenches, in the dime trenches. It brings you kind of, you buy karma points from that, right? So number one, I think you should always do that. We've done that with our first collection. This collection is going to be much bigger than that, and because our user base has grown so much, so we realized that we needed to do this. The second thing to part of the playbook is that as soon as you identify this and you give them this rewards, you must reward them continuously with more value accrue. Either that's through a meme coin, either that's through staking rewards, other airdrops from other projects, etc. And that's by doing that repeatedly, you just basically cement their loyalty forever, right? Because those people are going to be out there, they're going to be talking on Twitter, they're going to basically shilling the shit. It's all free advertising, right? So you're basically kind of like paying for that advertising. I had read this quote many years ago, about 15 years ago, where not a quote, it was an interview with Jay-Z. And I think it was when he was building Tidal, if you remember his thing that he sold, this music streaming platform. The thing that he said that really struck out to me is he said, the thing you need to care about is rewarding cultural loyalty. You do that and everything else kind of falls into place. Now, of course, crypto has financialized your ability to give these rewards and basically put them on steroids. And so I keep coming back to that. That's why we did the NFT collection. That's why we're going to do the second NFT collection. That's why the meme coin and eventually Dime, right? But it's like, how do you build this core set of users who have done the work, grinded it out in the trenches, and you kind of keep basically giving them more and more rewards, and then of course fees, all this stuff that you mentioned is all a part of that. But yeah, I'm a big believer in that, and that's how we do everything here.
Yeah, I love that. I think allowing people to build a sense of identity around something that they participate in for a prolonged period of time, and giving them almost responsibility over that that product's growth and health is a really, really powerful thing that people don't really take into account, because then your success is everybody else in the community's success, and you build everybody up with it, and it's happy families after that.
One thing I just quickly want to say is
please.
We've gone through crazy multiple cycles, both first with Paradigm and Paradex. I do want to give a quick shout out to our community. Even when people kind of didn't believe us, we were on tech that we just didn't scale. They still fucking believed in us. They listened to our shit and they were like, "Yep, I believe in these guys. I like the the vibes," and they stuck it out. I really want to give this, and you know who you are. I don't need to name names, but I really appreciate you. I know we talk about internally how through the tough times, not just the team stuck it by me, but also the community, and we will not forget that. So I just want to give a quick and we have such a fucking great community. You can check out, join our Discord. The banter is just nonstop. It's like nonstop entertainment, and it's like good, bad. It's all, but all in a way, and because you can't have culture and it's just only good, right? Culture is also kind of like, the bad shit. There's two sides to culture, and I think our Discord really has started to resonate that. So big shout out to the community. Thank you guys, and I really appreciate everything you've done, for us.
Thank you, Fiddy. This has been a fantastic chat. I'm leaving it very bullish on what Paradex is doing.
Okay.
I have one final question for you, which I sort of ask all of our guests before we end off, which is for those people who are listening in who are looking to get into Web3 more substantially, what is one piece of advice that you wish someone had given you when you were starting out, or a piece of advice that you would give to somebody else who's looking to get a foothold in the Web3 space and really get more involved substantially?
I think the best advice I can give anyone is buy a token that interests you. Without knowing much about it, if you like look up CoinMarketCap, you say, okay, this name sounds good, for whatever reason it appeals to you, buy it, because then you have a very deep incentive to learn about it, because you will lose money if you don't, right? This piece of advice, because people spend a lot of time fucking reading blogs and this before they make an invest, because they actually invest. So this is not financial advice on which token to buy. Just pick a token, any token that you buy, but buy it enough so that if the price moves against you, it will hurt. So it will force you to do the work. I think that's the best advice I can give anyone.
I love it. Beautiful. Fiddy, thank you very much for your time. Can't wait to find out more about the honey badgers in the next month or so. I know
Money
the Pith
badgers.
community, money badgers, pardon me. I know the Pith
Thank you.
community is looking very much forward to it. It's been a pleasure speaking to you. Have a
Thank you.
fantastic
And one last thing, by the way, our
Yeah, of course.
partners are also an extension of our community, and Pith has been a huge part of this. Big shout out to you guys as well. You guys have been fantastic partners. The Pith community, you are as much a part of our community as everyone else. So we will remember that when all these drops happen.
Amazing. Thank you very much, Fiddy.
Thank you, sir. Thank you, guys. Bye.
Thanks.
Have a good day.
Let's go. Move. There we go.
All right, that was super cool.
That was great. I actually didn't know very much about Paradex. I'm a terrible trader, so that was very educational for me. I like that a lot.
No, and I'm kind of sad because I should have asked a question. I do, maybe 6 months ago, I was using it a lot, yapping about Paradex a lot. And weekly, I'm not sure if it still happens, but weekly they were giving out these Schizopunk NFTs.
Yes.
So I did receive one. And I wanted to ask Fidi if this money badger would drug my Schizopunk.
We have to get him back on, maybe.
Yeah, but given how much he cares about community, and it'll be amazing. But no, this is a great product, and again, non-financial advice, but do peep at Paradex website, protocol. It's, very nice to use, and like coming from the best out there paradigm. Like I think recently they did like $1 billion trade on option. In like 1 minute, settled everything. So they're big brains, and it's great to have finally big brains and committed people into our space.
Yeah.
And we're lucky enough that they use Pith.
Yeah.
So
I love that they have a really solid, well thought out community focus, and that they're really pushing that forward as well. It's good to hear. All right, everybody. This has been Beyond the Price. Mark, thank you very much for joining me. You've been a great co-host. I think we'll have Pepito back next week, but I'm not 100% sure on that. Thank you, everybody, for tuning in. We'll see you all again next week for another episode. Bye, everyone.